Auratus Gold presents itself as a sophisticated investment platform, offering opportunities for individuals to invest in gold-backed assets, most notably through its TAS Gold tokens. On the surface, this may seem appealing, particularly in an era where many are seeking to hedge against inflation or market instability by turning to precious metals like gold. However, beneath the gold-clad promises, Auratus Gold raises several significant red flags. First, let's examine the core of their operation, the TAS Gold tokens. Auratus Gold claims these tokens are backed by physical gold reserves. However, they provide little to no verifiable evidence of this. Unlike legitimate platforms that typically offer transparency through independent audits, regulatory filings, or certification from reputable financial bodies, Auratus fails to provide such assurances. This lack of verification creates serious doubts about whether the gold reserves they claim even exist. In the world of precious metals investments, transparency is critical, and Auratus falls short in this department. Furthermore, Auratus Gold lacks regulatory oversight from prominent financial authorities such as the FCA, Financial Conduct Authority, in the UK, ASIC, Australian Securities and Investments Commission, or CYSEC, Cyprus Securities and Exchange Commission. Regulatory bodies like these exist to protect investors and ensure that companies operate with integrity. When a company like Auratus Gold is not regulated, it should serve as a warning sign. Without oversight, investors are left vulnerable, with no legal recourse should the platform engage in fraudulent activities. Another aspect to consider is the platform's aggressive referral program. Auratus Gold offers enticing referral commissions, paying out 15% on investments made by personally recruited affiliates. Additionally, if you recruit 4 affiliates who invest at least €500 within 28 days, you earn a 5% bonus. While on the surface this may seem like a legitimate marketing strategy, it closely mirrors the structure of a Ponzi scheme. Ponzi schemes rely on new investments to pay returns to earlier investors rather than generating revenue through legitimate business activities. Once recruitment slows down, these schemes collapse, leaving the majority of participants at a loss. In Auratus Gold's case, the heavy reliance on referral bonuses raises concerns that new money is simply being used to pay off earlier investors, a hallmark of a Ponzi scheme. Moreover, the platform's decision to block residents of the US and Canada further heightens suspicion. Both of these countries have stringent regulatory frameworks designed to protect investors from fraudulent schemes. By excluding residents from these countries, Auratus Gold may be attempting to evade the scrutiny of regulators who would otherwise take action against them. This tactic is not uncommon among companies that engage in questionable practices. Let's also discuss user reviews and complaints, which have been increasingly cropping up across various platforms. Many investors report difficulty withdrawing their funds from Auratus Gold. Some claim that customer support becomes non-responsive once they attempt to cash out their supposed profits. This is another red flag indicative of potential fraud. Legitimate investment platforms typically pride themselves on efficient customer service and smooth transactions. The fact that so many users are encountering issues with withdrawals is concerning and suggests that Auratus Gold may be intentionally limiting access to funds in order to prolong the lifespan of the scheme. Additionally, the website lacks transparency about its team or company details. There is no information about the founders, their qualifications, or the company's physical address. Transparency about who is running an investment platform is crucial for establishing trust. When a platform like Auratus Gold withholds this information, it should be a major cause for concern. Investors have no way of knowing who they are entrusting their money to, and this anonymity is a tactic often used by fraudulent schemes to avoid accountability. For those who are already involved or are considering investing, the best course of action would be to refrain from putting in more money until more information is available. If you have invested, it may be wise to explore your options for initiating a chargeback through your bank or credit card company, particularly if you're encountering difficulties withdrawing funds. Acting quickly is essential, as Ponzi schemes typically unravel rapidly once their recruitment slows down. In conclusion, while Auratus Gold presents itself as a lucrative opportunity for those looking to invest in gold-backed assets, the lack of transparency, regulatory oversight, and mounting complaints from investors paint a very different picture. The platform exhibits several characteristics of a Ponzi scheme, relying heavily on recruitment and offering unverified claims about gold reserves. Without independent audits or regulatory filings to back up their promises, Auratus Gold remains a highly risky and potentially fraudulent platform. It's always wise to do thorough research before investing, and in this case, the signs strongly suggest steering clear. If you're genuinely interested in making money from home through legitimate and sustainable methods, be sure to check out the free training linked in the description and pinned comment below. This training will show you actionable steps to build a real, lasting income online, without the risks associated with dubious platforms like Auratus Gold. Whether you're just starting out or looking to supplement your current income, this free training offers a straightforward, no-nonsense approach to creating wealth from home. So, don't miss out. Click the link or scan the QR code to get started today. Auratus Gold may seem like a promising venture at first glance, but as we've uncovered, the risks far outweigh the potential rewards. The best way to protect your hard-earned money is by staying informed, avoiding platforms that lack transparency, and only investing with regulated companies. Remember, if something sounds too good to be true, it probably is.